All right, so coming back to chapter 4, we got to take a look at the accounting cycle, and we also got to take a look at the generally accepted accounting principles. So here we're going to be talking about the different types of bases that you can establish yourself as a business in order for you to record or report your transactions. So we have a cash basis and an accrual basis, okay? So here's the idea here. Cash basis, okay, is when you strictly only record any transaction if cash is involved. So for example, right here, you only record revenues when cash is received. And you only record expenses when you have enough money to pay off those expenses with cash. All right? Or in this way, you make payments, right? You pay with cash that is readily available in your hands. Okay? Whereas, as an accrual standpoint, right, you would record the transaction or record a transaction regardless whether you received money or not. So the idea here is like you would record a sale that you accomplished or completed a task the minute it happens. So here we would record revenues when it is earned, when the transaction has been completed, when you sell a product, it left your hands, regardless whether you received cash or not. Okay? Whereas expenses, right? Expenses are recorded when it has incurred, right? So the day it was completed for whatever task it was for that expense, the minute it happens or the minute you receive a bill, excuse me, you're going to record it. Okay, regardless whether you made a payment or not. So the fine line here is that if you are heavily using cash, okay, so cash basis is based on strictly on cash. You have to receive it in order for you to record it. Whereas accrual accounting, it doesn't matter whether you receive cash or not. Okay? So let's go ahead and take a look at an example. Okay, so here we're going to take a look at an example for cash and as well as accrual basis so you can compare the difference. Okay? Excuse me. All right, so the example here is that you are a construction worker, okay? And your task is to build a office building, okay, for $50,000, all right? And the construction starts on January 1st and is scheduled to be completed by April 30th, okay? If the company pays you $50,000 on January 1st, how would you record this transaction? Okay, so here, the idea is that here's an expense that has to happen, right? We're being contracted to build a building. And in this case, our service is to complete a task. We have a deadline. We have a time frame from January 1st all the way to April 30th, okay? Now, how are you going to record this? On a cash basis? Straightforward, right? We received the cash, all right? And we completed the service, okay? All right, service is considered a revenue. We would record it in January because the idea is we received the cash right then and there, okay? And then when April rolls around, you're going to not record anything here because, once again, you've already recorded it in January because you were already given the money ahead of time to complete the service. Okay? Whereas on an accrual basis, right, you would also report the same thing too, except here in January, right, we don't record the cash because the service has not been completed. The idea here is that the task must be completed in order for you to, or the job needs to be done, or the revenue needs to be earned. In this case, the very first one, we didn't recognize anything, even though we did get paid, because the service is not completed. So in January, we do not write anything there. No journals required. However, the day that we complete the task, then we record that we received the cash and that we have service completed. Okay? So there's a difference here. One, we received cash for their service. So here we've already acknowledged that we got paid, the service will be done. But in April, we don't need to record anything because cash was already received, cash was already paid. Where on the other hand, it doesn't matter whether you receive cash or not. The idea here is, did the service get completed? And in this case, it did get completed in April. So that's where you're going to record the $50,000. Okay?
Do you put a note in there saying that the funds were received January 1st?
Oh yeah, absolutely. If that's something right here, I'm just getting the idea that when you actually record it. But yes, you would put a note, a description saying you have a job that's to be completed or it's to be done X amount of days. Yes, or we got paid in advance. Or yes, in this case you would get paid in advance. Okay. So there we have it. But in this case, on an accrual basis, you wouldn't recognize that money because a service has not been completed. Okay. Let's try scenario number 2. Okay. If scenario number 2, right, we are the same construction worker, right? We were giving a task to build an office for $50,000, but here's the difference here. What if the company pays you the $50,000 on April 30th when you actually completed the actual job, when the building is completely done and they pay you after? How would you record it this time? Okay. On a cash basis, right, in January, you will record nothing because no cash was received. However, you would record in April because cash has been received for your services. All right? Under the accrual basis, it's going to be the same exact thing as your cash basis because the idea here is that the task was completed in April, so therefore it will be recorded in April. Okay? Any questions in this? So the idea here is that if cash has been received, if you're under cash basis, the minute you receive the cash, you record it. The minute that cash leaves your hand, you record it. Where the accrual basis, it doesn't rely on that. It relies on accomplishing the task at hand. Was a sale complete? If you earned that revenue, then you record it regardless whether you received cash or not. And then same thing with expenses, right? Expenses are only recorded when the day it happens or the day it's completed. All right? Incurred. You would never record it before or after. It's always the day that you receive the bill, all right, or when the job has been completed is the day that you record an expense. Okay? So in this case, here's your example right here. All right, any questions here?
Ideally, you will use either one or the other, correct?
Correct. Now, here's a little notion I can tell you here. Most mom and pop shops are going to be heavily reliant on the cash basis because they're starting up their company. They can't afford to make payments to credit card companies to get the money for them, or they can't rely on, buying everything on credit, right? They should, most mom and pop shops, right, are cash basis. Usually when they accept cash from customers, it's cash only. When they buy their supplies or buy their other things or pay for rent, it's usually cash, all right? But for more corporate or bigger businesses that have that credibility or that ability to owe a lot of people money, but at the same time generate that income to cover those expenses, then they're more likely to be on accrual basis. Now, in accounting in the United States, you're automatically going to be assumed that you're going to be using the accrual basis because, once again, the purpose of doing business is to reflect in other people's eyes that you are doing well, as in all of the generated revenues that you've earned is enough to cover all of the costs that you've incurred to run and operate your business. But in reality, that isn't the best way to look at things, because if you think that you can get away with having everybody owe you money, is that a true reflection of you earning the money? And if that's so, right, where are you going to get the money to pay off your expenses if you never received the money in the first place? That's where the fine line is right here. Is think about Walmart, think about Target. Maybe like about 60% of their customers are on credit, or they have an account with them. They have the Walmart credit card. Now think about that compared to all of their cash deals that they do have. Now again, at least 50% of them should be at least, cash sales, right? But think about it. If Walmart is to sell all of these products, right, and record it on an accrual basis, only about 50 or even 40, I think I said 60 earlier, 40% of those sales are actually money. Like they actually received money for it. But is 40% of their sales going to be enough to cover all of their expenses? Is 40% of all that cash going to be able to pay their billion employees that they have? Is it enough to cover the facility, the land that they're occupying? Because Walmart not only is a building itself, they have a whole parking lot to hold all of their inventory in the back of the Walmart. So, is their cash sales actually enough to cover everything? Because once again, we'll talk about this in chapter 10 when we dive into receivables, when we allow our customers to owe us money. You're gonna learn that customers, they can fault on their payments, and then you're gonna be in the hole for that. All right, because you have to know that if you're going to be allowing your customers to owe you money, you are subject at risk that you may never see their payment. All right, and we'll talk about that in chapter 10 again, once again. But this is the idea here that most cases, mom and pop shops or very small businesses, they will run as in a cash basis first. Now, yes, you can interchange, but once again, we got to think about consistency, right? Maybe for the first 5 years, you could run as a cash basis and then slowly convert into an accrual basis once you establish enough credibility or enough credit, or in a way where all your expenses that you're able to owe money, right? Then yes, you could convert into an accrual basis. However, but most cases, accrual basis will never shift to a cash basis because you're already doing one thing here. You're already allowing people to owe you money, so you can't revoke that and say, well, I want to be a cash basis only. No, most cases, if you're already established as a accrual basis, you would most likely never go back to a cash basis. All right, any questions?
No.
All right. Chapter review once again. We got to take a look at the 10 steps of the accounting cycle. So I want you to make sure that you know the order, because I will test you on the order. Okay? Know that the journal comes first and then the ledger. And then the trial balance. Not trial balance first and then collect your source documents and then analyze. No, that's not how it is. It goes in this specific order. We learned what the accounting period is, right? It's basically when you choose to schedule to complete the accounting cycle, so to complete all 10 steps. And you could choose, right, with the rules of Acct. They allow you to choose between a daily, weekly, monthly, quarterly time period, right? You could choose to go through the whole cycle every day if you'd like. Go through the cycle every week. or every month, whatever is feasible and easier for you to be able to do. Okay. We talked about calendar versus fiscal year. Again, these are mostly geared towards filing your taxes. Okay. And we also talked about the characteristics of financial statements. Why do we produce it, right? We produce our financial statements for two people, right? The internal and the external users. But what makes it so, why do you do it for them? Is for these characteristics right here. You want to show that it's reliable. You want to make sure it's comparable. Okay. And now we talked about the generally accepted accounting principles. Now, this one, I'm going to tell you right now. The generally accepted accounting principles for this class, we're only going to be mostly looking at the first 8 that we saw today, right? The accounting assumptions and the principles. The constraints and conventions, they're more for cost accounting or managerial accounting. These are for the managers that have to make executive decisions based on other companies or what makes it beneficial for their company, right? This is deciding, okay, well, what kind of cost would help me benefit my company? What kind of decisions do I need to do to validate that I need to record this transaction? Or why do I need to be conservative in this area? So once again, this is more for advanced level of accounting. So managerial accounting, cost accounting, all those other things are going to primarily gear towards using the constraints. So what I'm going to do is I'm going to only test you on the first 8. Your accounting assumptions and your principles. Now, that doesn't mean you shouldn't stray away. Just know that they exist, your constraints and conventions. Make sure you know that they exist and, just a rough generation of what they are. But you're not going to be tested on them, okay? Because this is beginning level of accounting. We're only going to be focusing on primarily the first 8, okay? Now, here's a mnemonic device that can help you, I guess. So how we talk about or learn about your generally accepted accounting principles, known as GAAP, if you just think about it, GAAP, you're learning your ABCs, your assumptions, your basic principles, and your constraints, right? A, assumptions, B, basic principles, C, constraints. These are the fundamental key guidelines and rules that you must hold every single time you do anything for accounting, right? Any questions there? And last but not least, we talked about cash basis versus accrual basis. Okay. All right, any questions in regards to chapter 4?
No.
No.
All right, so let's go ahead and do the exercises, and then we'll end the day from after we complete this. So let's go ahead and get started. So first things first, what is the accounting cycle?
It's a set of rules that ensures the accuracy and conformity of financial statements.
Set of rules that ensures the accuracy and conformity of accounting. What did you say? The accuracy
Of financial statements?
Okay, there you go. Financial. Yeah. Good. Right? So once again, this is important that you know because this is what we're going to be revolving this whole course around is completing the accounting cycle. Okay? What are the 4 characteristics of financial statements?
Reliable, relevant, consistent and comparable.
Good. So once again, if another way that you could memorize this is the two R's and the two C's. Okay, must be relevant and reliable, consistent and comparable. Okay, two R's and two C's. Okay. Number 3, what are the 10 steps of the accounting cycle?
The first one is collect source documents.
Mm-hmm.
Let me name all 10. Or
Yes, or
you
whatever,
can
whatever you
yeah.
want.
Uh, collect so I don't have number 10. I don't think. Collect source documents, analyze and sort data, record transaction in a general journal, post entries to the
General.
general journal
Okay, so,
journal
so that's number 3,
Ledger.
general ledger, right? There's.
general. Oh, okay.
Mm-hmm.
I'm sorry. I put journal here. Okay, ledger and prepare unadjusted trial basis,
Trial balance.
trial
Good.
balance. I'm sorry.
Mm-hmm.
Enter. I can't read my writing. Enter the adjustment.
Mm-hmm.
Prepare adjusted. I didn't finish that out. And the last one was create a financial statement.
Trial balance.
Trial. Okay, trial balance. I'm sorry. I had a long night last night. I didn't.
No worries.
I didn't get to finish everything.
No worries. You did good so far. Good. It's good so far. Financial statements. What else?
Closing books.
You gotta close the books. Yes, close your temporary accounts out. And then last but not least,
Post closing trial balance.
yes, post closing trial balance. Good. All right. Make sure you know the exact steps in order. Okay. Number 4. Go ahead.
I'm sorry. Are we going to be able to use these, whatever you're typing, to study for our assessment?
Oh, absolutely. Yes. Everything's open note, open book, and everything.
Okay. And so when we answer the questions, can we use what you're typing in there?
Oh yeah,
It's just
if you look into the actual folder, I've every day that we complete this, I post the answers on there. So if you want to use that, be my guest. I encourage you. If you don't know the answer, look it up.
Okay.
Okay, that's the idea of this. All right, I'm not gonna force you to remember all this because it's a lot of details. It's a lot of information. So you know
Yes.
you're lucky enough to even memorize the very first part. So like I'm saying, Kim, like I'm actually glad that you were able to get through the first 8. All right, you don't have to go through the whole 10, but that's exactly why I have you guys have everything open, open notes, open lecture notes, open book, everything open, because at the end of the day, right? Even your boss is going to tell you if you don't know the answer, look it up. Right? They're not going to expect you to know the answer at the top of your head. If you do, then that benefits you in the long run because then you're, more quick to answer the questions. But the idea here is I'm trying to train you guys that if you don't know the answer, look it up. All right, look up the answers because everything on the Google Classroom is there for a reason. All right, so when you're doing your quizzes and stuff, if you don't know the answer, just look it up. Okay? So,
Okay, that's good to know.
what is the difference between the calendar year and the fiscal year?
The calendar year is January 1st through December 31st.
Good, December 31st. Okay. What else?
And the physical year ends consecutive. Fiscal year is the
Uh,
end of the 12th.
okay.
Starts on the 1st and ends on the 31st.
Okay, so consecutive. There you go. Months. Starting on start first on first month and ends on the last day of the 12th month. Good. Number 5, what are examples of an accounting period?
Monthly.
Monthly, good.
Physical.
And
Okay, not physical. This is examples of an accounting period.
Accounting
Like,
period.
yes. How can you break it down?
Daily.
You could do it every day. Good. Daily.
annually.
You could do it annually. Good. Because a lot of companies do annual reports. Good. And, ooh, there's why. What else?
Quarterly.
You could do it quarterly. Yes. That's also a common one that most businesses do. Quarterly. So again, the accounting period is going to be based on when you want to complete the 10 steps of the accounting cycle. All right. What does GAAP stand for?
Generally accepted accounting principles.
Generally accepted accounting principles. Good. All right. Number 7 says here, what are the 4 assumptions under GAAP?
Business or economic entity assumption.
Mm-hmm.
Going concern.
Good.
Monetary.
Monetary. Good.
And accounting period.
Mm-hmm. Okay. What about your basic principles? What are they?
Historical cost.
Historical cost.
Realization, revenue recognition.
Yes, realization / also you can also use revenue recognition. Whichever one sticks with you. Good.
Matching principle.
Yes.
And adequate disclosure.
Adequate.
Yes, you pronounced it better than me.
Adequate disclosure. Yes, right? When we have pertinent information that revolves around a business transaction, but it's not, it's cluttering your journal space, you have a place to put it. All right. Number 9, what are the 4 constraints / conventions? So we talked about this. You just need to know what they are.
Constraints, conventions. Wrong one. This right here. Okay. 4 constraints. Um, cost benefit.
Cost benefit, good.
Conservatism convention.
Mm-hmm.
Industry.
Benefit. What was that?
Industry. Oh, I'm sorry.
No, that's right.
Cost benefit. Conservatism convention. Industry.
Industry practices.
And I didn't get the first. I didn't get the other one.
Right. Anybody want to help her out?
Materiality.
Yes. Determining whether a transaction is significant enough to materiality what determining whether a transaction is significant enough to journalize, right? Materiality. There you go. All right, number 10. All right, so 10 through 16 are going to be just kind of quizzing you about the rules of GAAP. So let's take 10 for example. Okay, under oh wait, hold on. Sorry, 13 through the rest are GAAP questions. Okay, so number 10 says here that under the cash basis of accounting, revenues are recorded when blank is received. Okay, expenses are paid when blank is available to spend.
Um, money, cash.
Cash, good. And cash here. Yes. Okay. Now flip reverse. Oh, that's cash. Oh, there you go. Cash. Flip reverse, number 11. Under the accrual basis of accounting, revenues are recognized when blank.
Services are completed.
Okay, good.
Revenue earned.
Earned, yes. I'm gonna write that in. That's good. Services are completed, right? And expenses are recognized when blank. Incurred, all right? Or in this case, you could also apply when services have been completed. All right. Okay, so no questions 12 through 16 are going to be GAAP questions. So let's look at it carefully. So number 12 under GAAP, which rule states that you must separate transactions from personal and business?
Business or economic entity assumption?
Yes, that's correct. Business or economic entity assumption. Good. So once again, we need to understand that when we are a sole proprietor, you need to determine the difference between personal and business transactions, okay? That way it keeps you secure, but it also allows you not to fraud your company.
I have a question
Go ahead.
regarding that.
Okay.
So let's say that you're doing the books for a small business.
Uh-huh.
Um, if for whatever reason they are not separating their personal purchases from the business purchases, based on your experience or your knowledge, is a bookkeeper financially responsible?
That's kind of like, that's a double-edged sword kind of question, just because if we look at Enron, right? Enron paid someone. He paid him off to write incriminating details in their books, right? To make the books look clean. He paid him off. But he was also responsible for that too, because he agreed to it. Now, for any reasons that, again, this is where ethics is going to come into play, because if you don't think it's right, then you have the choice to either continue working for that company or leave the company.
Got it.
Okay, so that's an ethics kind of question. But once again,
Yeah.
if it's like something minor, like, oh, we had a business meeting, so I paid for meals, that's actually reasonably acceptable. Okay. But for most cases, some business transactions that seem more personal than business related, you can question the boss. But again, if the boss thinks that you're snooping and controlling their business, they might fire you. So that's going to be one of those kind of, you're going to lose either way.
Yeah. Okay. Thank you.
Yes. All right. Number 13, under GAAP, which rule states that assets must be recorded at original price or fair market value?
Historical cost.
Historical cost. Yes, that's correct. Historical cost principle. Good. Number 14, okay, under GAAP, which rule states that when recording a transaction, it must be in terms of value or dollar amounts, okay? Cannot record as a quantity or a per item. What rule states that?
A monetary measurement.
Monetary measurement. In this case, I'm okay if you guys just can just refer to this as monetary assumption. You don't have to be specific. As long as it's one of those three criterias, it's fine. Monetary, oopsies, a sum. Good. 15, okay, under GAAP, which rule states that when you have extra information that is pertaining a transaction, okay? Example, number of employees, wages, salaries, and cost of inventory, etc., right? You must record it in the notes to the financial statements.
I got that as a monetary measurement.
Okay, so this is other information. Right? Because if we know monetary assumption is that you need to record as a total value or a total cost, where does the rest of the information go?
Is it adequate disclosure?
Yes. Yes. It goes to the adequate disclosure. Because once again, when we take a look at journalizing, you can place that information in your journal, but the idea of the journal isn't to clutter with a whole bunch of information. You want to kind of restrain yourself from cluttering your journal because at the end of the day, your journal space is just for you to jot down your transaction. It isn't for you to explain the transaction. You have other places to do that. But again, especially if you are recording that you have 10,000 or what was it? What did I say? $100,000 worth of cost for salaries and wages expense, right? You're paying $100,000 to employees. It would be good information if you let the company know how many employees you have. Which ones are salary? Which one are wage based? What titles do they claim in order for you to be able to pay them that amount? So basically it's another way of justifying I'm paying this guy $50,000 a year. Okay? So once again, all of that information is pertinent because you can't just say I have a total cost of $100,000 worth of employees. That tells me nothing because that doesn't tell me how big your company is. That doesn't tell me how small your company is. That doesn't tell me how many people are in your company. All right? So that's why adequate disclosure is the place, or the notes, the financial statement is what tells you, hey, you can't bypass this extra information because of the monetary assumption rule where you have to journalize everything in terms of dollar value. So they dedicate a small section for you to have all of that information there. Right? And then last but not least, question number 16 under GAAP, which rule states that all revenues must equal to all expenses? Yes, I heard that. Matching principle is correct. Oops. Matching principle. Yes, because here we'll take a look at this too, because when we do accounting, when we're using the double entry system, we are essentially computing this section right here where we're matching our expenses with our revenues, right? Vice versa, by doing equal parts, right? Where our equal debits equal our equal total credits. So that's the same idea here where we're using the matching principle, because when we generate revenue, we need to associate with the cost it took us to sell that item, and also what profits that we're agreeing on, and what was the cash that was validated, or what was the total amount that we sold it for. All right. So good job, everybody. All right. Once again, I post the answers in the same folder as the